So I was chuckling to myself when you talked about this as a roller coaster. The analogy I would use is a bungee jump,
Yep.
because it has that vertical drop and that intense reversal. The cord caught and then pulled. It feels like it's almost pulled the market back up. And that to me is important. It says to me that behind the scenes of a market that is, at or near all-time highs, there's a level of anxiety that shows up in incredibly impulsive and emotional behavior. This is a crowd that doesn't stick around. It moves and asks questions later.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. Today's expert, behavioral economist Peter Atwater, adjunct professor at William and Mary College, has long affirmed that changes in confidence consistently and predictably impact investor preferences, decisions, and actions. Well, there's certainly been a lot happening so far this year to both spike and crash investor confidence. It's been one heck of a sentiment roller coaster so far, with little signs that things will calm down anytime soon. So, what are likely to be the biggest drivers of confidence from here, and what are his key indicators telling him about the prospects for the rest of 2025? Well, we'll ask the man himself. Peter, thank you so much for joining us today.
Great to be here, Adam. Thank you.
Thank you. Well, Peter, I should start with an apology that it has been far too long since your last appearance on this channel, so I'm glad we're rectifying that now. I'd also like just to acknowledge, I think, a really nice bit of praise that you got recently. I was interviewing Jesse Felder, who both a friend, a friend of both of ours, but also just one of the more thoughtful, smarter people I have the pleasure of interviewing. And he really took his time to pause and call out your work as one of the top influences on him. And I thought that was, I think a well-deserved, well-earned honor, but a good honor as well.
Yeah, it was very humbling. I'm a huge fan of Jesse and his work, and to hear him talk about the confidence map and how that's been helpful to him, yeah, that's tremendous praise, and
Well,
just very humbling.
and just to be clear too, I hear praise from you, not just from Jesse, but from other folks I interview as well. In fact, I just got finished interviewing Stephanie Pomboy a few hours ago and mentioned to her that I was going to be talking with you, and she said, "Please give Peter my best," and again reiterated what a big influence you've been on her.
And a huge fan of Steph's as well.
All right, well,
Very, very
it's
fun.
a mutual
Yeah.
appreciation society here at Thoughtful Money. All right, well, look, let's dive right in, and I guess, let's just start from a high level. Um, on a score of 1 to 10 for volatility, how does 2025 score so far, confidence-wise?
So I was chuckling to myself when you talked about this as a roller coaster. The analogy I would use is a bungee jump,
Yep.
because it has that vertical drop and that intense reversal. The cord caught and then pulled. It feels like it's almost pulled the market back up. And that to me is important. It says to me that behind the scenes of a market that is, at or near all-time highs, there's a level of anxiety that shows up in incredibly impulsive and emotional behavior. This is a crowd that doesn't stick around. It moves and asks questions later.
Yeah, and this is sort of one of the things I was talking about with Stephanie earlier. The market really does sort of seem to have kind of this bipolar nature. There doesn't seem to be much sort of in the middle. There doesn't seem to be much of a Goldilocks from a sentiment standpoint. It is either things are going to hell in a handbasket right now, or the future's so bright I got to wear shades. Does that tell us something? I mean, does history sort of tell us when you get to a market that is that sort of schizophrenic? Does that say where we are anywhere on the story?
Yeah, I think of this not as risk off, risk on, but risk in and risk out.
Hmm.
So to your point, there's no middle. It's all in, all gas pedal, or all brake. And that says to me a couple of things. One, it brings back market memories of the 1960s, where you had markets that moved like a yo-yo, but really didn't go anywhere. So again, volatile people creating volatile times, volatile markets. But it also speaks to me about sort of this passenger seat environment with investors. One of the things that I notice a lot is that this is a group of people that have become very complacent in the passenger seat, whether that was with allowing the Fed to drive, or fiscal policymakers to drive, or even post the election, allowing President Trump to drive. And the passenger seat, which I write about in my book, is an environment where we have certainty but no control. And you can think about it like an airplane. Everything feels great until we're all praying because we're afraid the plane is going to crash.
Mm-hmm.
And I think that it's that backdrop of not uncertainty that gets all the attention, but the inherent powerlessness that investors feel today, that CEOs that I talk to feel today, and that feeling that I'm either going to be a incredible beneficiary or a absolutely obliterated victim of decision making of others.
So you said several things here that I think is really interesting. So to the extent that what we're seeing now is similar to the 1960s, but lots of volatility, but at the end of the day, you don't really go anywhere. Um, we've had a lot of people on this channel recently who have made sort of similar assessments about 2025 at least, and perhaps maybe even a longer stretch than that ahead. But of course, their message is the passive investing strategy worked really well over the past decade plus. That's probably not going to work nearly as well in that type of environment, and therefore you want to adopt more of an active investing strategy, which a lot of these people are sort of positioning as a return to the way that investing used to be, where you had to do your homework, you had to try to identify the good companies, separate the wheat from the chaff, and try to invest in those companies. Where everybody has been so conditioned now to just buy the general market or buy the index and just hold, buy the dips, and know that the Fed, uh, fiscal spending, the new president have your back, right? And when you talked about this sort of passenger seat mentality of investors and CEOs and whatnot, it's not a huge surprise after so much time of artificial intervention in the markets that you learn to stop fighting it, and you just learn, to go with the flow, right? That not a huge surprise. So in many ways, this is somewhat a self-inflicted situation we find ourselves in, and this may be a poor analogy, but I recall hearing a comment from a Russia expert where somebody was talking to them about, post fall of the Berlin Wall, would Russia eventually, adopt capitalism once it got a real taste of it? And their saying was, well, if you understand Russian history, the Russian people just kind of always want a czar. There's just something in their culture where they just kind of expect that there's going to be some strong man to tell them what to do, whether it's a czar or whether it's a modern version like a Putin, right? And I wonder if we've created this environment for so long in the markets that the average Western investor is just looking for somebody to drive the bus, as long as the bus goes up over time more than it goes down.
Yeah, and I see this particularly in the post 9/11 generation. If we think about what happened in the world of parenting post 9/11, it became about keeping kids safe. And so anything that was viewed to be uncertain became perceived as unsafe. And so you had lots of parent involvement. We talk about tiger moms and helicopter and
Yep.
bulldozing parents. But this is a generation that has been led to, they have been happy followers. Somebody else has fought the battles for them. And I think that that transcends so much American behavior right now.
Mhm.
That this is a group that would happily, stew in the passenger seat rather than get in the launch pad. The idea that they would take control is anathema to many of them. They don't know how. They have no experience leading. You, I suspect, like me, we're raised as kids, I was told go outside and play and don't come back till dinner.
Yeah, the era of really kind of benign parental neglect. Yeah.
Yeah, but with that, we learned how to manage, take control in uncertainty. And yes, the outcomes weren't always wonderful, but we learned from them. We developed scars and bruised. We learned about courage and responsibility and lots of important things that for many people today have been postponed into their lives.
So let me dig into that for a second. I think it's really important. So you're the behavioral economist. I'm not. So this is my armchair version. Please correct what elements of it might be wrong. Um, but raising this post 9/11 generation the way that you described, we've taught them that safety matters most, and we've taught them that they should seek safe spaces, and set the expectation that they should expect to have a safe space, right? Which really doesn't map to real reality, right? And so, using this from an investor mindset, um, yeah, you want to have an environment where the markets are just steadily going up over time because of intervention, right? And that's what you expect. When the worm turns market-wise, these people are sort of the least prepared to deal with the shift in markets. So in other words, you're potentially setting up this younger generation of investors for extreme disappointment if their expectations are set on being taken care of by kind of the market gods and expecting to have safety where, you know, in a volatile world, the safety is not a guarantee.
No, and discomfort is the norm. One thing that really bothers me is that this sense of any discomfort is being translated as a lack of safety. That we're going to have an uncomfortable conversation. I'm going to raise a viewpoint that's counter to yours,
And then I'm
and
going to cancel you, Peter, just so you
and
know.
so my backlash is extreme as opposed to you know let's have this conversation, and respect each other and learn from each other as opposed to fleeing from that possibility. I mean, I think our echo chambers in terms of media consumption are a reflection of our
Yep.
unwillingness to introduce uncertainty into our lives.
So I want to get to what does it look like in a world where people conditioned to safety and certainty suddenly don't have it? What are the implications you expect from that? But real quick, if I can do just a quick tangent, because you're the perfect guy to clarify this with. Um, what I had heard was this actually started before 9/11. I think 9/11 was a real catalyst in kind of solidifying the supremacy of safety. But what I had heard was that there was a shift in the mid 90s, that if you ask people who were born, I think the year was before 1996, what's your first memory of being out in the world by yourself without your parents, literally exploring the world? Um, and the average, I think, was around 5 to 7 years old. Oh, I used to get to walk to my grandma's on my own, or I could walk to school on my own, or I could go out and play until the streetlights came on and then I had to come home type of deal, right? And if you ask people born after 1996, it's more like 12 to 15 years old. And what changed, at least initially, was they attribute it to the advent of 24/7 cable news. So there was news on all the time and airtime that had to be filled. And then it was the abduction of Polly Klaas and I think one or two other children that were abducted. And that was all over the airways in these new 24/7 news channels. And it put the fear in the mind of American parents, oh my gosh, that could happen to my kid. And so parents got a lot more clingy or hovering. And then, of course, 9/11 really amped up that stuff. And the societal impact of that was to your point, when you're a young kid and you're out in the world exploring it on your own, you know, you deal with adversity, you learn how to overcome it, you're inventing and playing games with your friends, and you have disagreements and you learn how to work through them. So by the time you get to college, um, you know, you can know how to handle interpersonal disagreements, and it's just all part of life, and you're pretty facile with that. Whereas if you don't get started until your teens, you don't have enough time. So by the time you get to college, and I'm curious about the college part because you're a professor, by the time you get to college, you still don't know how to process that stuff well. And so when you have disagreements or adversity with others, you interpret it more as like a, you know, you're reacting lower on your cerebral base, you know, brainstem, and you're taking it more like an existential threat on you, and so you react like to a physical threat, and you want to cancel people, and you demand, you know, I've got to be protected from this, right? So, A, is what I'm saying, is there any real grounding in that? And B, what are you observing living in the academic sphere?
Yeah, so two thoughts that came to mind. One is think about the minivan and what the minivan of the 1990s was intended to do. I mean, we were shuttling kids back and forth and around that, we needed these vehicles to move lots of kids at once to from one location to the next. So your point about protecting them is to me real, so you can see the cultural response.
Hmm.
At the other end, the college end, what fascinates me most, Adam, is that again, I feel like the man who was raised in black and white TV. But one of the things when I talk to my peers about the college experience is our parents dropped us off, and at best we might see them at fall break, maybe Thanksgiving. In my case, I didn't see my parents till Christmas because they were overseas. But you burned the ships. The ships were
Yeah.
burned. And that requirement to be there and to know that you had to make it work there is something that this generation doesn't have in their life. They know that they can move, they can transfer, they can call old friends, they can flee from their current space easier than any generation before them. They have mobility that was unavailable. And as a result, they never are forced to bloom where they're planted. And I think that has huge implications to community and service to others and being part of something that is intimate and physical in terms of your relationships. And that goes away because I don't have to make it work.
So super fascinating. So, okay, so if that's how the younger generations are, you know, have been raised, and by younger generations, we're really talking millennials, Gen Z, Gen Alpha, et cetera, right? Um, with Gen X as maybe the transition generation, and the boomers being purely grew up in black and white TV, at least initially. Um, what does that lead you to expect for society? I mean, I'll bring it back to investing, but like,
Yeah.
you know, what are the implications? I'm sure I can invent some negatives. Are there some positives? Is it more corrosive than it is beneficial? What are you looking at?
So I look at the volume of individuals who feel today trapped in the passenger seat, who realize that, or they're coming to realize that they have sacrificed control for certainty
Hmm.
and that they find that really unsatisfying.
Sorry to interrupt, but this, I mean, it harkens back to the old quote attributed to Benjamin Franklin, right? Those who would prioritize security over liberty deserve neither.
Yeah,
Yeah, they're waking up and realizing, hey, I've made a trade-off that actually isn't serving my long-term interest here.
right. And has left me ill-equipped to be an entrepreneur, to be an inventor, to be a true creator, because they have been raised to be passive. And I see this particularly frustrating to young men
Yep.
who feel this need to be in control. And on the one hand, we could say that this is bad, but on the other hand, I am looking forward to those moments where this next generation concludes it's time to take control.
Hmm.
And there I'm excited to see what they do and the direction that they take things. And the sense of inherent community and responsibility that will come with that. This is a generation that has never had to demonstrate courage or sacrifice. They have been raised in an environment of abundance, not just of stuff, but of safety. And so they're going to have to confront scarcity and a need for priority and issues of sacrifice that I think will form the basis for what comes after this turmoil that we are within. I mean, I think there's a real generational transfer that is underway behind the scenes. You know, we have an old guard in both Republican and Democrat politics that are likely to be surprised by a new generation coming to the fore.
Okay. I'm hearing a lot of echoes of Neil Howe, sort of in what you're saying with his fourth turning, and I'm sort of fresh off interviewing Neil from like a week or week and a half ago. So what I hear you saying, Peter, is there's a lot of underutilized human potential, if you will, in the younger generations right now because they're sort of stuck in the passenger seat. But just as Neil would say, in a classic fourth turning, the pressures keep building as the status quo starts to fail, but they eventually become so intense that it's almost like the heat that then gets hot enough to create a chemical reaction, right? To break the bonds, let new molecules form. And that'll be transformational for these generations. And I get the sense, don't let me put words in your mouth, but that you're not saying these are lost generations, that's it. These are never going to be useful, uh, age cohorts. They're going to sort of have a great awakening at some point here. And that may then unlock a lot more human potential where they start getting out of the passenger seat and into the driver's seat.
Yeah, one of the things that, again, all of the media would lead you to believe that the issue today is uncertainty. I don't believe that. I believe the issue that is lingering is a sense of powerlessness. And what I know looking at social movements is that you can have all the uncertainty in the world, but it is the addition of powerlessness that creates the spark. So if we think about Occupy Wall Street, we think about Black Lives Matter, we think about the spontaneous events that take place. It's an issue of a demand to take control, even if it's wrong. That I
Mhm.
have to do something in response to what I'm feeling.
It's sorry to interrupt, but I'd love for you to riff on this. I mean, you're making me think of the American Revolution, where the colonists, they thought of themselves as British, but they just kept getting insult after insult, Stamp Acts and all sorts of other things that
Yeah.
just kept increasing to the point where they felt like we have no other choice but to do this. And we know that like if we do this and we lose, we're going to get steamrolled by the most powerful army in the world. But our backs are against the proverbial wall here where we now have to lean into this.
Yeah, and for the young, they have nothing to lose.
Right.
I mean, they look at I mean, you look at the wealth divide, which is something that as you know, I've been writing about for a long time. I get frustrated because the media would lead us to believe that the conflict is left or right. I believe the conflict is in terms of economic and wealth terms, up
Hmm.
and down. And what I see for those at the bottom is an immense weight of vulnerability. They feel powerless and uncertain in so many dimensions at once. And that weight ultimately creates a tipping point where they will do something. And I have no doubt that the extraordinary wealth divide that exists today is going to come to an end, because those at the bottom will not allow it to continue in place.
Okay, and so very curious, what is your thinking on how that is likely to manifest? I can make an argument it might manifest in a way where financial prices crater, and therefore the rich just aren't as rich relatively as they were. And a good example might be, lots of boomers are really hoping to sell their McMansions at current market values, but most, millennials who are the natural buyers can't afford them. And so the boomers just might be forced to have to take some big haircut on that. The other way I could make an argument for it is millennials get into political power and it's confiscatory taxes, right? How do you think it's more likely to play out?
So I think you can look at all of those. I think, too, we need to recognize that shareholder primacy is a relatively modern, recent phenomenon. And this notion that in all instances the shareholder comes first, I can see the shareholder sacrificed. That shareholders are an easy symbol for those without to go up against. Whether you label it Wall Street, the rich, the shareholder class feels particularly vulnerable to me. Um, I also think that you have this question of technological change that could just as easily upend where value is. And so I don't know what the trigger is, but I think we're naive to think that the status quo, where the system bails out the shareholder at every turn, is sustainable.
Okay, and if that's your thinking, how material is it that the new president is using language like Wall Street's headed good for a long time. We're now going to prioritize Main Street over Wall Street.
So I think our current administration has a very challenging tightrope to walk, because it was elected by populist support, but is also incredibly beholden to the ultra wealthy. I mean, you look at who attended the inauguration, um, you know, the number of billionaires in the room and the cabinet. So this is a precarious position for an administration. And what I see is sort of this to and fro. One minute it's like the sort of the biblical story, loves the first, hates the second, loves the second, hates the first. But you see this tension where you have deliberate appeal to one group and victimization of the other, and then you switch to the other side. And I think that's a tough act to keep going, to try and placate those that have diametrically divergent preferences, interests, wants in the outcome.
So that said, do you see this as a progression? Meaning, looking at previous recent administrations, seems like they were pretty much on team capital, if you will. And now this one seems to at least be giving some lip service to labor as well. Maybe it's trying to thread the needle, maybe it might not be able to. But is that the natural progression you need to get to before you start seeing policies that are enacted that really prefer labor over capital? And I'm not saying necessarily the Trump administration is going to be the one to do that, but is this sort of the progression you would see on the way towards Main Street taking over from Wall Street?
I guess I look at administrations following Main Street as opposed to leading Main Street.
Hmm.
And so I look for tension to mount on the populist front that suggests that the winds have changed. And in some ways, you could look at the sacrificing of Elon Musk as an example of where the administration has chosen to sacrifice, one of the elite in order to placate those at the bottom. We'll see how this plays out. And just to be aware, this is not a uniquely American phenomenon. I did a presentation recently on what I call a few good men. We live in a unique moment in history where we have country after country being led by dominant, independent nationalist figures.
Right.
You know, you've got Erdogan in Turkey and in El Salvador, in China, in Israel, in India, in Hungary,
Hungary,
Romania.
Argentina. You've
Yeah,
seen the rise of Le Pen and AFD in
yeah.
Germany, even. Yeah.
And so
Maloney.
what I think is going to be important to watch is how do these individuals sustain their national support or quell their national nonconforming in an environment where ultimately they are in competition with each other. One of the things you were talking about earlier was diversifying by company. I think that the big challenge for investors today isn't diversifying by company, it's diversifying by country,
Hmm.
because you have independent leaders who are going to dictate policies. And I think you as an investor have to conclude, in this country, do I believe I will be a beneficiary or a victim? And even more importantly, do I think others think they will be
Right.
beneficiaries or victims? And that's decision making that most investors today have never had to contemplate. That when they've talked about emerging markets or frontier markets, it's been concept of opportunity. They sort of overlook history where you had nationalist leaders who were not always kind to capital from abroad. And I think today we need to think about this holistically, globally. Okay, you choose you don't want to be in America, but where are you going to go otherwise? What is an environment where your American money is going to be warmly received and you will be a beneficiary and not a victim in that other country?
That is such a great point. And I'd like to dig into it a little bit more, but let me ask first, because you put your finger, I think, on a massive sea change that is in process, right? Which is, up until a year ago, ish, you know, globalization was the playbook, right? And that really has it's getting swiftly dismantled worldwide, as you've said, right? And who knows what's going to happen, but I find it hard to feel like we're going to go back to it anytime soon, if at all. And I've had people on this channel who have really studied this, geopolitical history, who for many, many years have been saying, look, globalization is the exception, not the rule here. And we're just the pendulum swinging back to the way the world has pretty much always worked. So you could say that confidence in globalization has suddenly gone through an accelerated erosion. Um, Beyond some of the implications for investors you've mentioned, just how important is that?
It's hugely important because to me it's a reflection of deteriorating confidence. I talk about us everywhere forever as the mindset at peaks in confidence. And the idea that you could get anything from anywhere to anywhere overnight. I think of FedEx as really the embodiment
Hmm.
on a corporate perspective of this mindset of globalization. And so what we're doing is turning inward, as we always do as confidence falls. And we're discovering the fragility of a highly complex, interconnected system,
Hmm.
as we always do. So there are what we're revealing isn't to me anything new. It's these are the same things we saw in the mortgage world as confidence deteriorated there.
Yep.
You know, and what's the implications then, I think, have to be looked at in a couple of dimensions. And these are critical elements if you're running a business. The mobility of labor, goods, capital, and information. And I look at those as four variations on a single theme of confidence. I know that when confidence is high, all of those will be mobile at once, intensely mobile and frictionlessly. I know when confidence falls, all of them will be subject to barriers, walls, moats, impediments. And this is where I think if you're looking at the markets, you need to be looking at immigration policy. You need to be looking at trade policy, because ultimately that becomes capital policy.
Hmm.
And so, what does it mean as countries are balkanizing and creating impediments to the mobility of individuals and goods? I think it's only inevitable before we see that in the mobility of capital.
Okay. Um, so let's see here. So, you know, I guess let me go narrow first, then we'll go maybe wider again. So the new administration has been extremely disruptive. I think in many ways it has surprised its own supporters at times, right? So, for example, the way that the Liberation Day tariffs were rolled out, I think even surprised a lot of people that were sort of on Team Republican. Um, and so you could make the argument that that is further evidence of what we're talking about, which is countries all of a sudden uh, breaking away from norms and what's expected to do something that they think is in their extreme, self-interests. But also that you could just say, look, so far the new administration is just eroding confidence because people either don't like the direction things are going in, or it's just additional uncertainty. And when you're more uncertain, you have less confidence, right? Um, so I'd love to get your thoughts on that, but if I can, while you're answering that, Trump has thrown up a lot of dust in the air. He, at this point, though, has a lot of accomplishments that he can point to now and say, I got that done. I got that done. We're making progress on this, right? So there is becoming more certainty, even on the crazy trade side. Even since Liberation Day, we've had, prices have still largely come down. We haven't seen crazy inflation yet, at least. We've done the deal with the UK, China, which nobody thought was going to come to the table, and they were saying they weren't going to come to the table. We're now doing talks with them. Um, Trump's trip to Saudi Arabia, has a trillions worth of announced deals and commitments and buying a bunch of Boeing planes and all sorts of things, chips commitments, all that type of stuff. So, there's a whole long list, and I've mentioned it in a couple preceding videos here, where you can say he's removing uncertainty now from things. And of course, the markets have made up for all of their April losses. The S&P is now green on the year. Um, so, how do you see Trump as of right now in the new administration? Is it more disruptive change agent that is eroding confidence, or is it more uh, breaking some of the things that needed breaking, and it's now actually building momentum in a way that may increase confidence?
I think, Adam, that all of those are true. And I think that for some, the idea that you can hold something that is scalding hot in one hand and icy cold in another feels like being disingenuous. But I think it speaks to this tightrope of trying to satisfy one group and another group who have diametrically opposed wants. And so what he can do today is to demonstrate that he has satisfied both of them. At the same time, I think it's also fair for others to say that they have been immense beneficiaries, and others to say that they have been immense victims of what has happened. Both of that's all true too. And so I think that the challenge for folks in trying to create a singular story that he's all bad or all good is almost self-defeating, because you have to recognize that what he's trying to do is to satisfy both ends of the spectrum at once, and will create very visible, highly touted successes for both groups, so that when he walks in the room with one group or the other, he has the ability that you've just identified, that he can talk about his successes. And that is his nature, that is his want, and he has been given the ability to do that. The question for him, and he's not alone in having this question, is can you continue to do that? Does the crowd on either end allow that to continue in an environment that feels like red light, green light, where it's all gas pedal, all brake, all gas pedal, all brake? And some would suggest that it begins to feel like an abusive relationship, where one day you've come home with flowers, the next day you've come home and hit somebody backside the head. And so that contrast exists in plain sight. And so I say, yes, he has been successful in delivering to both. The question will be, can he continue to do this in a way that maintains a sense of certainty and control?
Okay. I think you just described a pretty complicated situation in a very effectively simple way. So thank you. That actually helped me. Um, so then let's trundle into the so what part of the discussion, Peter, which is okay. So you've kind of, I think, really effectively described the situation that we see ourselves in, and some of the things that investors need to care about more now than they didn't have to, up until now, pretty much. Um, but for the lived experience of the average person and average investor going forward, what do you think is more probable? I kind of get the sense from what you've said so far is that things are going to continue to be volatile and rocky, and before we get to the optimistic part where the younger generations find their sense of purpose and we unlock all that potential, pressure is going to have to get greater, meaning pain is going to have to mount. And so it's probably not going to be a super fun journey in the short to midterm before some of those really transformative actions happen. So I don't want to put words in your mouth, but like, what should people kind of be mentally preparing for from here?
So I think investors need to be thinking about, are the companies and the locations that you are investing in, will they be beneficiaries or victims of the dominant national leaders where they're operating? And here I think it's going to be increasingly challenging for these trans global companies to satisfy not just two masters, but 12 masters at
Right.
once, each with competing demands. And again, their challenge is trying to placate individuals who have absolutely opposing goals and objectives. And so they too are now on a tightrope. As investors, you need to be thinking about things in terms of not gains or losses, but beneficiary or victim. That in every case, what I see is a binary outcome. You see folks winning in an extraordinarily enormous way one day, and others who are being brutalized the next. And we see this in price changes and just global sentiment. And I think you have to think about, if I'm owning a stock, what is the probability that my CEO ends up having a Zelensky moment in the White House? Because I think that in the not too distant future, we will see a CEO, just face a very confrontational president who wants to make clear that compliance is required.
Mm-hmm.
And again, these are he is not alone in that. I don't want anybody to think that I'm trying to single out, President Trump, good or bad. I just see him as one of many representative figures today.
Yeah, and that's consistent with Michael Every, who is one of the analysts who, for a long time, has been predicting this return to nationalism or mercantilism. And
I think of
so,
it almost as feudalism.
yeah,
These are feudal leaders.
so Michael has again was promoting this before it became as obvious as it's becoming now. But one of his things that he mentions, he says, look, in a mercantilist society, you could even say feudal society, but in a mercantilist society, the government is really, instead of just letting sort of free trade flourish, it is saying, look, we've got national priorities, some of them that might trump economic priorities. So in some cases, the economy is going to be subservient to a greater national priority. And to guide ourselves towards those national priorities, we may feed this part of the economy while intentionally starving, or we may intentionally starve this part of the economy to feed this part of the economy, right? And then that might shift next year as our strategic priorities change, right? So you kind of have to be willing to keep your eyes open for that. And that very similar to what you're talking about, like a Zelensky moment, you might get a kind of like what China did with Jack Ma.
Yeah.
You could see something happening here where Trump says, look, we're really trying to get, X manufacturing back up and running in the States here, and a big CEO that's standing in the way of that. Trump might say, hey, you know what? Just like he did to Harvard, right? Okay, well, we're going to revoke we're going to stop giving you grants. We're going to revoke your tax exempt status. If you're not playing ball with us, in key sector X, there might be some bad things that happen to your particular company. Your competitors who are playing ball with us might be just fine, but we may starve you out.
Yeah, I think people bristle when I talk about centrally planned government and economy, but this is going to be centrally dictated, so long as you have a independent nationalist leader. And this is where I talk about shareholder primacy. I believe is a myth today. That shareholder primacy is incompatible with the kind of political agendas that I see around the globe.
All right, so that's really super interesting. Does that in any way then make you feel a little more like, okay, then stay invested in the markets. You're not telling people get out of the stock market entirely, but you're giving them more dimensions that they've got to pay attention to. But does it also make you kind of think like, and therefore you might want to hold some of your wealth in assets that are less susceptible to this? So gold might be an example, right? It's a physical form of wealth that you can hold, and unless the government tracks you down and tries to forcibly take it from you, it's yours, right? Or real estate or other types of assets as well. But I'm just curious, does it inform your thinking that way at all in terms of assets to own in a full portfolio?
Yeah, it makes me think about geographic diversification.
Hmm.
It makes me think about assets that have utility value as opposed to investment value, because I know that as confidence falls, utility matters more than potential return. And so as our time horizons shrink what matters changes. It's, ramen noodles are currency in most jails today.
Hmm.
So you need to be thinking about what has utility value, what will ongoing have utility value, and do you own that? Um, and I think that as you are evaluating your investments, if you're going to be a shareholder today, you have to filter them through political risk screens first. That political risk, rather than being the fourth or fifth element of an investment decision, is now the first element. How will this fare with Mr. Modi? How would this fare with Mr. Erdogan? How would this fare with Mr. Trump? Because those those individuals are going to determine your fate.
It's so interesting. You're making me realize you're connecting a dot here for me. I have found myself talking about politics way more in the past 4 to 6 months than I had in the past several years, on this channel. And it's not because I've wanted to. It's not like that was an intent or a priority. I'm just finding it's becoming increasingly hard to try to forecast where things are going in the economy without taking these political policy decisions into consideration. And so while I had this cognitive dissonance about like, why am I doing this if it's not really what I'm setting out to do? You're connecting the dot with me, which is because I have to do it. It's just we're entering a period where you have to take in the political winds much more than we've had to in the past.
Yeah, and I would say to those who are ardent Trump supporters, appreciate that he will make decisions where you will be both a beneficiary and a victim.
Hmm.
And I would say those who are Trump, opposing, there will be investments that are beneficiaries and victims. And to paint these dominant leaders as all good or all bad, as the media would like us to do, really distorts how people take risk today. You can see it where, if I talk to investment advisors, they joke about their red client portfolios and their blue client portfolios. It's like that's not a healthy approach, because as we've seen, these dominant figures are often mercurial. And so you have to be prepared for their mood swings.
Oh, that's really super useful. All right, well, Peter, look, is there anything kind of on the confidence spectrum that you look at closely that I haven't thought to ask you about yet that's worth putting on the radars of our viewers here?
Yeah, I think that investors today need to anticipate bungee jump like movements, because what I see is decision making that's no longer driven by value, but is driven by price. That it is the movement in price that is soliciting enormous entry or enormous exit.
Okay.
Folks are not being reflective. Very few folks today are taking the time to think about value and what's something worth. And I say that because I think investors need to appreciate that currencies themselves are where a lot of value gets hidden, get exposed, gets created, and gets destroyed. And so if we see, lots of discussion around the dollar collapsing in value,
Yeah.
well, you could see the S&P skyrocket in nominal terms in that, but the price and value will have become completely decoupled.
Hmm.
And I just encourage investors to step back sometimes to think about things in terms of value, you know, earnings multiples, cash flows, things that ultimately drive the success or failure of a company. The other last thing I'd leave you with, Adam, is to appreciate that in the world of currencies, it's a game of relative beauty. And so when I hear people saying the dollar is going to collapse, it's like, well, that would suggest then that the euro will rise in value, the yen, the yen, all these other currencies will appreciate in value. And that may or may not be the case. What the currency market helps us to see is what are the best and worst houses in a bad neighborhood today. And so I encourage folks to pay attention to the currency market because they're really giving us a read of how does global sentiment feel about one country versus another.
Versus another. Yeah. Um, all right. Well, look, how does history tell us? So if people are not investing based off of value, and I agree, they haven't in large part, painting with a broad brush here, but they haven't in large part for a good long while. If you look at how elevated valuation metrics have become, really over the past decade plus, but at the start of this year, we were, well, things cooled off a little. Now they've heated back up, but I mean, we had almost every valuation metric that you could point at, we were either near all-time extremes or at the all-time extreme, right? And there's a meme that's been circulating over the past year or so on social media saying, this is the single best investment decision you can make. And it's a picture of somebody tossing Benjamin Graham's Intelligent Investor into the trash, right? Kind of meaning like the old rules don't apply anymore,
Yeah.
right? So what does history tell us when we fly the market plane, not by valuation metrics, but by price metrics? I mean, I'm assuming they don't end up well, but you correct me if I'm wrong.
They don't end up well. And ultimately, what markets bottom on is immediate tangible utility value.
Mm-hmm.
So the time horizon is today. The hypotheticality of it all is very small. It's, is this useful or not? Is it useful to me here right now? And so I encourage folks to think about having in their portfolios things that would have immense utility value in a crisis. We watched with COVID as people were racing to Costco to you know to with their pallets of different
By the
things.
base fundamentals, my toilet paper, yeah,
Yeah,
bags of rice,
yeah,
yeah.
and what that was telling to me is, oh, these are the things that have immediate tangible utility value.
Yeah.
And I'm not saying, fill your house with toilet paper. What I'm saying is that if you're going to invest through a crisis successfully, those companies that provide those goods are much better standing and a much more stable foundation than, some sort of meme coin.
Okay. So, I mean, to my mind, this is sort of things like consumer staples. It's probably even like utilities, it's commodities or commodity producers, just essentials that the world needs, not quite so much the high-flying growth stocks or consumer discretionary or things like that. Am I thinking about this the right way?
Yeah, needs not wants.
Okay. All right. Well, Peter, look, I'm looking at the time. We're up here at the hour. I could go an awful lot longer for you if we had the opportunity, but I've got to be respectful of your time. It's always super fascinating to talk to you. Um, I'm going to ask in just a second where people can follow you and your work, but I do just want to re-mention from my discussion with Jesse, your book, The Confidence Map. When Jesse was recommending it, it was prominently right there on the bookshelf behind him. It's actually over your shoulder right there. Yep. So where can
Shameless.
people who are really interested in your whole construct of looking at the world through the lens of confidence, where can they buy your book? Anywhere books are sold?
Anywhere books are sold, Amazon, Barnes and Noble. Support your local independent bookstore, please. Um, yeah, and I think people what what gives me the greatest satisfaction with my book is that people read it particularly investors, thinking it's a book on economics or investing and confidence. And then they'll talk about with me the life experiences that it's helped them to better understand. I had a hedge fund manager who, his eyes welled up as he was talking about his wife's experience with cancer and how
Mm.
the framework, you know, powerlessness and uncertainty helped him to better organize the journey that they had been on. So it's a book on decision making that uses economic and investment examples, but it's to me it's all about decision making.
Well, that is great and obviously well deserved from all the work you put into the book. In some ways, I mean, I find the field of behavioral economics so fascinating for a whole variety of reasons. One, because we think economics should be so easy to understand because it's so quantifiable, and then the human equation just makes it all totally irrational in many ways. So we need these frameworks to think it through. But I also I put it in the same category as Robert Cialdini's influence, which you're nodding vigorously here. Um, it's you read it and then it really does change the way in which you look at the world. You can see the world differently, and in many ways, you're better armed to deal with what the world throws your way because you actually now have a framework to understand it and react to it. So, anyways, great work on that book. For folks who would like to follow you and your work in between now and the next time you come on this program, Peter, where should they go?
So they can find me on X, on Blue Sky, on LinkedIn. I write in different voices for those different environments. I also write commentary through Financial Insights, which is my consulting firm, where I try and use the framework that I write about in real time, you know, where sentiment matters in the markets.
All right, fantastic. And Peter, when I edit this, I will put up the links to your handles there and your website on the screen so folks know where to go. Folks, those links will be in the description below this video as well. All right, well, look, Peter, hang on just 1 second. I'm going to do just 30 seconds of housekeeping, and then I want to give you the last word. Folks, if you've enjoyed having Peter on this interview, even half as much as I have, please let him know by hitting the like button and then clicking on the subscribe button below, as well as that little bell icon right next to it. And if you would like to get some professional help in navigating this future ahead, which I think is fair to say Peter thinks is going to be fairly volatile for a good while, and maybe have some increased pain ahead of it before we start climbing into some better future, then highly recommend that you leverage the expertise of a good professional financial advisor, importantly, one that understands and takes into account the issues that Peter has discussed for us here. If you've got a good one who meets those criteria, great, stick with him. But if you don't, or you just like a second opinion from one who does, consider scheduling a free consultation with one of the financial advisors endorsed by Thoughtful Money. To do that, just fill out the short form at thoughtfulmoney.com. Only takes a couple seconds to fill out the form. These consultations are totally free. You get personalized, bespoke advice from these advisors after they've sat down with you and learned about your specific personal situation. And there's no commitment to work with them. It's just a public service they offer to be as helpful as they can. All right, Peter, thanks for your patience. So the folks watching this video, in large part, yes, we do have some professional investors, but most of them are just regular people who have been working hard to build some wealth to provide for their family's financial future. And I'm guessing many of them feel a little discomfited by the increase in uncertainty and volatility of this year. What would your advice be to them, for the ones that I think their core fear is just things are getting so uncertain that I'm afraid the odds are getting higher that I'm just going to become collateral damage to these forces, and my wealth's not going to make it to the other side when I need it.
So one of the things, because of all of the volatility that I say a lot these days, is that it is important to plan for what you can imagine and be prepared for what you can't. It troubles me to see investors who are all in or all out. And that leaves them exposed to what they can't imagine happening. And I think this is an environment where tempering the want to be risk in or risk out is really important. The future is inherently unknown. And what changes isn't the future, it's us and our feelings. And when we feel things are uncertain, that's really on us. And that's a statement of our level of confidence. And so I encourage individuals to listen to your stories because they are a function of your level of confidence. And we need to be careful not to get seduced by them because they will be most seductive, most, you know, absolutely affirming at extremes in confidence. And that is where we ultimately make our worst decisions, good and bad.
I just want to underscore what you're saying, twofold. One, you are right, and I talk with many, experienced financial advisors on this channel about how, as investors, it is most frequently our own emotions that are our biggest enemy towards our investing success. That when we make emotionally based decisions, they tend more likely to be the wrong choice at the wrong time, right? So A, that, but B, hearing this from you, Peter, who is, one of the most widely respected behavioral economists out there, is it's not just an opinion that you're slinging. This is your life's work in studying how human emotion impacts investing decisions. And just one thing you said, it's going to be when you feel most certain something's going to happen, is when you probably need to apply the greatest discount factor to that certainty.
Yeah, and I find myself plotting my own mood on the map, and that helps me to realize, okay, you're looking for trouble here.
Yeah.
And just
And just to make it actionable for folks, it doesn't mean, oh, I feel really certain about this, so therefore I should do the opposite. But it just means that don't go 100% all in, right? At least have some hedges in place, right? Okay, in case my plan A doesn't pan out, let's make sure I don't get totally destroyed and I've got some chips over here on a plan B. Or it's do plan A 100%, but only at 80%, right? Keep 20% of the portfolio away, right? So you're nodding as I'm saying all this, right?
yeah, I I'm a big believer in confidence diversification, that's ultimately what saves you as an investor. You should have in your portfolio something that is great, feels good, is doing really well, and then you should have something that would make others laugh. That you hold this thing that if you went on Twitter and said, I own this, the crowd would ridicule you because ultimately it is owning a mix of emotions that creates portfolio diversification. You don't ever want a pie that is all hot or all cold. I want pieces that are piping hot and are right out of the freezer cold because I know
So
that that's going to help me over time.
I totally understand the logic behind that, but I want to understand it a little bit better in the sense that you want to truly diversify, and I like this concept of using levels of confidence as a way to diversify. I'm real certain about this. This one I'm not that certain about, but I'm going to have some exposure to it anyways, right? But I don't necessarily get the sense you're saying, okay, put some chips on the thing you're most confident in, and then try to find the dumbest investment that you could find, right? So, for example, I don't, unless you want them to, I don't want them to take away, okay, let's say you're really into, the Mag 7. So you're going to go big Mag 7. Um, but then you're going to go buy some fart coin just because it sounds like the dumbest thing you could think of.
No, I think it's more tempering your portfolio. Yeah, I mean, what the last several years have shown people is if you have a pie that is nothing but Mag 7, that pie has done extraordinarily well. But when that pie cools, the entire pie is going to cool.
Right.
And so I like to have things that are abstract because they'll do well when confidence rises. I like things that are tangible as well because I know they will do well when confidence falls.
Okay. I think that's a very helpful clarification. And I really I think, interesting and probably uh, quite successful way to look at how to diversify. Peter, thank you so much. This has just been wonderful. Best of luck in the interim. I'll continue looking at your work. Highly recommend folks go read your book. And uh, I'll invite you back on in about a quarter or so, unless something happens in between that really materially changes your read of the confidence map. And if that does happen, I just want to make sure you understand the door is always open for you here at any time to come on and let us know, call an audible midstream if you see a big change like that.
I appreciate that, Adam. Thank you.
All right. So wonderful, Peter. Thank you. And everybody else, thanks so much for watching.